Ralph Bassett, the Russell 2000 index is trailing the S&P 500 this year, but you're still a fan of small caps. Why is that?
It is marginally trailing this year, and actually over the 3- and 5-year period, it's lagged marginally as well, been on par. I think, from our perspective, some of the issues have been that smaller cap companies have been investing in their business more aggressively than taking margin, such that earnings growth, while healthy, has been perhaps less pronounced and less stable. That said, we do think going forward there is still margin opportunity for smaller cap companies, particularly relative to their larger cap counterparts.
All right, and what's going to happen to the market's minnows once the Fed raises rates? Because the whales can handle the rate hikes. It's harder for the smaller players.
Yeah, I'd actually disagree with that. I think, from our perspective, small caps are more oriented to the domestic economy, which, given the Fed rate hike, is really, more pronounced for them. So 20% of the revenues, give or take, are coming from overseas, whereas for larger companies, it's on the order of 50%. So we're more confident in domestically oriented companies. All
right, let's talk about some companies you like in the Aberdeen Small Cap Fund. The first is WSFS. This is a lender down in Delaware. It's having a great year. I think it's up over 30%. Why do you like this one?
We initially looked at it from the standpoint that M&T Bank had bought Wilmington Trust. The market was then consolidating so that there was more rational pricing. WSFS has also taken share from smaller community lenders that have struggled a bit more coming out of the crisis, and population growth in Delaware is actually surprisingly strong.
All right, you're also a fan of Prestige Brands. That stock's up almost 40% this year. They own a lot of old school brands like Debrox and things you find at the end in the pharmacist aisle. So tell me why you think this one can go higher after such a great year.
Prestige Brands is great at acquiring brands and really pushing them through their distribution channel and investing behind them. And our view is that over time they can continue to acquire brands, invest in them, and over time, there's going to be a lot of brands cast off from some of the larger pharma companies. You can read about P&G and their restructuring of their business. We think that many companies, especially the larger ones, will look to sell off their orphan brands.
All right, and then finally, you are a fan of Culp. They supply fabrics to the mattress business, as well as the upholstery business. It's based in High Point, North Carolina, the furniture capital of the world, having a great year. But what takes Culp higher?
Certainly the housing recovery, specifically just household formation, but also existing and new home sales have helped support the stock. I think going forward, we see a lot of consolidation in the industry continuing. So they've been able to service all the mattress players, and they're also now also servicing the kind of mattress in a box phenomenon that is prominent in New York, but also rolling out internationally as well.
All right. Well, thanks a lot, Ralph.
Thank you.
Thank you for watching The Street.